Hello from the Dukas Copy TV studio in Geneva. We are back with our weekly technical analysis with Jean-Francois Owczarczak. He is director of the Management Joint Trust in Geneva. Jean-Francois, welcome to the studio again.
Hi, Daniel.
So we had a correction up of the euro. Now we are in a downward trend. Actually, is this a trend that is going to last? What does your FinGraphs analytic tool say to this?
Okay, well, we're back on our FinGraphs mosaic here. We are looking at daily mosaics here to get a view over the next few weeks. The Easter holidays are coming, so we're taking a bit more of a longer-term view. We also want to highlight that the long-term trend on the euro is still heading lower, as it is on gold. And it's still in an uptrend on equity markets. So let's dive into them and start with the euro. Quite a lot of news this week. We're going to have European inflation tomorrow. We're also going to have the non-farm payrolls on Friday. So we're going to be able to gauge the strength of the US economy versus the strength of the Eurozone. If we look at this chart here, this is an investor's view of the euro dollar. An investor's view combines a weekly chart for perspective over the next few quarters, a daily chart for perspective over the next few months, and an hourly chart for perspective over the next few weeks. And at the moment, the three trends interplay into a potential intermediate bottom and a downtrend. So both the long term and the medium term are heading down, and the short term is correcting up. So let's first zoom into the long term. This is a weekly chart, 1 point per week. The perspective it gives is over the next few quarters. And as you see, we're in a downtrend. We've pretty much reached our target zone here. We could still justify that we could move lower into the 102 zone over the next quarter or so. So that's pretty much our target, down to a very low 1 point something towards mid-year. We do see some exaggerations. Our two envelopes are touching each other, and our risk index is in the oversold. Yet it has just entered the oversold, so it would really need to show more exaggeration and start to reverse to justify a medium-term trend here on a weekly chart. So at the moment, we're still in a downtrend, and there's still a bit of potential to go possibly until mid-year. On a daily chart, we have pretty much exhausted the potential here. You could see impulsive 2 down done. That means our most extended target measure has been achieved, yet it continued down. This is a fairly rare phenomenon, but it is usually a sign of a lot of strength in a price move. So what we're going to anchor ourselves today on is basically that the trend is still heading lower at the moment, and we are seeing a counter trend here with our risk index and the oversold and our envelopes touching each other. But at the moment, this counter trend is not strong enough to actually reverse the downtrend that we have here on this daily chart. So we would still be heading down over the next few months. Now the hourly, you could well see the correction up that we've been seeing over the last 2 weeks. With bottom here oversold, reversing out of the zone, and envelopes touching each other. We did make it above our corrective targets, and the targets are now pointing to above 112, possibly up to 115. Now this intermediate correction is coming into problems. It has been moving lower over the last few days, and it's probably a good idea to move into the trader's view now, which gives the perspective over the next week or so, over the next day or so, or over the next hours. And the one we really have a look at here is the 60-minute chart. And following the correction up, the 60-minute chart is now back in a downtrend. It's only a correction for now. And basically, we would want it to hold above 107.95, so about 108, to not justify that the euro is resuming its long-term downtrend. So as long as we keep it above 108, we do have a chance to make it up to 112 to 115. But watch out, these are very important levels. And if they are broken, we could probably justify that the weekly and the daily downtrends are still in place.
So if we have a look to the gold, so there has also been a downward trend for the gold. Is this still in place?
So let's look at gold. Well, gold, also an investor's view here, so the perspective over the next few quarters, the next few months, and the next few weeks. What we could see here is that, as has been the case over the last 2 years, our long-term weekly chart has been in a bearish trend. It's getting close to its targets. If you can see, we have a range here between 1,200 and 1,000. But we would still have possibly 1 or 2 quarters to go, and the possibility to the possibility to reach the lower end of our targets here. If we do take an average, we are around 1100, and that would be for us an average target that we would see possibly also until mid-year. So the weekly is still heading lower. The daily has seen a correction up over the last 2 weeks. From an intermediate bottom here, some exaggeration on the risk index, as well as our two envelopes touching each other. But for now, this has not been strong enough to actually turn the trend. And it is still heading lower and possibly down to 1140, possibly even below 1100. So still in a downtrend for now over the next month or so. Now if we look at the hourly, strong correction up. We didn't make it above the corrective target. We could make it above 1221, as we said last week. Yet, at the moment, it also seems like this short-term uptrend is in jeopardy. And so in this respect, we'd also look at the trader's view, and here focus on the 60 minutes, and the 60 minutes has broken through its corrective targets. So from this perspective, the trader's view is negative again. The investor's view is long-term negative, but has a short-term correction. We'd really have to see if this uptrend can hold to justify that this correction up can continue. But in case of a doubt, we would favor the medium and long-term trend. So we'd still be negative on gold.
Thank you. And if we look to equities, we are in an uptrend still right now, or what does your system say?
Well, if we look at, this is the S&P futures, also on an investor's view. If you look at the weekly chart, we're still heading higher. Our impulsive two targets, which are quite aggressive targets, are leading us up to 2240 to 2440 over the next few quarters. There's some signs of exaggeration on the risk index, but at the moment, the trend is your friend and it's still heading up. On the daily basis, a similar situation. We've seen quite a lot of work here since early December, yet the trend is still heading up, and over the next month or so, could make it back up to 2184. The risk index is not much dangerous, pretty much in the middle at the moment, so it could be supportive if it started to turn up. Now if we look at the hourly, we had a move down. We pretty much almost made it to our impulsive targets. There probably is still a bit more risk over this week, yet our risk index is already oversold. If we look at the whole picture, weekly up, daily up, hourly correcting, probably not too far from its downward targets, it may be a good opportunity to consider buying the dips here.
Mm-hmm. So this is probably supported also now by consumer sentiment. So the economic sentiment index from the European Union has recently come out and was more positive than thought. Actually, what about consumer discretionary index, if we look at that?
Well,
does it also support?
Consumer discretionary basically does mirror the strength of the consumer sector. And what is probably interesting to see, if we go into our US equity directory here, if we go into sectors, if we go into consumers, go into index and trackers, we would find the consumer discretionary sector here. If we look back in time and compare the current situation, which is quite extended with previous extended situations, so let's go back, for example, to 2000 and possibly sometime into November 2000, and we can see that although most of the sectors were still heading up at the time, consumer discretionary was one of the first sectors to turn down. And it's basically, there was a negative wealth effect. You had the internet bubble burst in 2000, and the retail was very much involved in that bubble, and it had an immediate effect on consumers and consumer discretionary. You could probably say the same thing about the 2007 period, where we're also pretty close to. And if you look here, the consumer, most of the sectors at that time, in late 2007, was still heading up. Yet you did have the subprime crisis. Retail hit quite hardly by the real estate in the US. And again, the consumer discretionary sector was one of the only ones which was not able to make it in impulsive mode up again. It only made a correction and started to head down again. And so in both cases, consumer discretionary was kind of the canary in the gold mine, saying that there was more trouble ahead. If you look at it today, and the market is extended, if you look at it today, it is still heading up at the moment, and it still shows a potential over the next few months. So this situation is not the same, or doesn't seem to be quite the same as the ones we had in 2000 and 2007. And hence, based on this indicator, we would remain positive for now on equity markets.
Thank you very much, Jean-Francois, for this additional information and for being here today.
Thank you.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for our latest updates and exclusive interviews. Have a great day and see you next time.